do you manage emotions and expectations of customers and your team in the current environment? Today, we're going to talk to award-winning producer from Prime Lending, Mark Raskin, and find out his thoughts. This is the Mortgage Banking live stream. Welcome. This is the Mortgage Banking live stream. Today is August 19th, 2020, and we got a great show for you. I'm Troy at Garris Horn. We are here to connect you. We're here to educate. We're here to entertain. We're going to have some fun with this. If you have any questions or comments, or you want any topics that we address in future live streams, just shoot me a text. If you're looking at this through YouTube, through the YouTube channel, the contact information is down below. And if you're not, get to the YouTube channel and you'll see that contact info. You can also just email me, Troy at garrishorn.com, and we will make sure to get your information or to get your questions answered. A couple shouts out as we get started. The Texas MBA is holding its Mortgage Symposium and Reverse Mortgage Day in November. Make sure you sign up for that. Great content, great people. And you will definitely want to be registered for that. It's a great organization. And Mark Raskin, who's going to be on today, is actually a past president of Texas MBA. And it's one of the places where I've gotten to know him the most. He was also a fellow future leader at the National MBA and a long time and dear friend. A couple of shouts out to some individuals here. Brent Duham at Loan Depot. Thanks, Brent, for the support. Nice seeing you. Brent, by the way, hosts a podcast. He calls it the Breaking Business Barriers. What he does is he interviews entrepreneurs from a variety of different industries, and you should check out Brent Duham's podcast. Brian Picker, Southern Trust Mortgage. Brian, thank you so much. Good seeing you as well. I think Mark actually knows Brian too from a long time ago. Katrina Cheng Wano, she's now at Swenson Group. Thank you, Katrina. And let's get into the conversation. So the Democratic National Convention is going on right now. I talked about this a couple of days ago. This is the third day, right? And we have all day today. It's, the daytime is a lot of caucuses and the meaty part gets going tonight. Last night, Biden clinched the nomination. He'll accept that presumably tomorrow. But some people were confused because, first of all, a UAW former president nominated Bernie Sanders, and then Alexandria Ocasio-Cortez, she seconded that nomination, and it confused people a little bit whether there's some sort of bifurcation that would put a wrinkle in that process. But she followed up by Twitter later saying that it was just part of the rules requirements, and so they needed somebody to second that. Tonight, they have a number of speakers. They have John Legend playing as well. They always have entertainment. But tonight, for those who are interested, Gabby Giffords, Kamala Harris, and President Obama are all going to be speaking in that order in terms of the headliners for this evening. And, whether you support them, whether you don't support them, it's information you probably want to know about. And I do recommend that people tune in. Again, whatever side of the aisle, the three different sides, really, whether you're Republican, Democratic leaning, or independent, you probably want to know what people are thinking and saying. And it's a good process. You tune in. It's a weird convention, too, because the convention is entirely virtual. And so I watch these things all the time. It's just fascinating to me. I watch it every go round, and it's just weird. It's just very strange. A couple other shouts out: Dan Hastings of Merchants Mortgage, Jane Burns of Cross Country Mortgage, Chad Hargrave, FCLS, First Choice Loan Services rather. It's just so many great people, and then Mark Raskin's own colleague Rob Koch. Thank you as well, Rob, at Prime Lending. So the meat of our conversation today, there is a refi frenzy going on out there right now. And there's a lot of confusion and bad information that is out there. And borrowers are confused. Borrowers are under a lot of stress. the team members of the various lenders are under a lot of stress. And so I thought no better time than now to talk to a veteran like Mark Raskin, again, an award-winning producer at Prime Lending. The accolades are almost endless. So, a Best Mortgage Professionals, named Best Mortgage Professionals in D Magazine, top originator 5 years running in Scotsman's Guide, innumerable 5-star reviews on Yelp. I mean, it's such a great CV that Mark has. So we're going to bring him in and talk about how to manage the emotions and expectations of both of your customers and also the team members in today's environment. So Mark, welcome. It is great to see you, and thanks for joining us.
Thanks, Troy. It's great to be back.
So Mark, can you talk to us a little bit about some of the things in today's environment that are causing borrowers and teammates to have a lot of stress and anxiety, and also just disinformation out there?
Well, we can start with the fake news. We've all heard that phrase, fake news. So a lot of times borrowers will hear on the 10 o'clock news about how rates have dropped. And usually the data that the news has is days, if not weeks old many times. Typically it has points associated with it. So it causes the borrowers to go out on the internet. And all of the major lenders out there that have the rates on the internet know that they need to post the lowest rate out there to get people to call in, right? And so, not to mention the company names, but one of the biggest players out there, if you go to their website, they have great rates, but if you scroll down to the bottom, you'll see that it takes 2 percentage points, and that's 2% of the loan amount. So in discount points to get that rate. So if somebody's borrowing $300,000 over and above all the other costs, they're going to pay an extra $6,000 in discount points. So it's our job as originators to educate and play counselor for the borrowers, and not just a salesperson to offer the lowest rate. And when the borrowers get confused, a lot of times I'll look on their credit report and see where they bought their last car. And if it's a Lexus, let's say, I'll remind them when they went in to buy that car, they probably came in on an ad to get that Lexus for $299 a month. And once they got into the dealership, they realized they had to write an $8,000 or $10,000 check to get that Lexus for $299. So many times we'll compare that to explain to them why that $299 payment might not be the best thing for them. So a lot of analysis goes into it, and in re-educating the borrower that while rate is important, it's not the number one thing they need to concentrate on.
Yeah, that makes a lot of sense. And so in the advertisements that people see for these rates, they really need to be able to understand. I can tell you that I talk to people all the time, just they know that I'm somehow related to the mortgage business. And so they'll talk about these wonderful rates, but they don't understand points at all. And actually points can be helpful sometimes, right?
Exactly. So we'll do some quick analysis. And I'll typically go to look on their application to see where they bank. And if it's, Bank of America, Chase, Wells, whoever it is, I'll go to their website, pull up whatever the rates are, and direct the client to go to the website and scroll and point them to where on the screen they'll see that rate includes additional costs. And then we'll do some simple math. And I'll use the example of a lender that charges 2 points. Let's just go with the more common one. They're charging 1 point. So on a $300,000 loan, that's what, $3,000. And right. You're looking at maybe $40 a month difference if it lowers the rate 1/4 of a point. Just do simple math and explain to the borrower that this can take them over 6 years just to break even off of that discount point.
Right.
And so bringing it back to their actual scenario, and typically either their current mortgage servicer or their bank, so that they can see it, it makes it a lot easier consultation to show them where it may or may not be in their best interest. And if they're going to be in that mortgage for 10 or 15 years, it's unlikely we're ever going to refinance them again unless they need to pull equity out. So if they are going to be in the property for a long time, then it may make sense to pay the points and get that rate lower.
Yeah, case by case. That's what it is, right? It's case by case, and then in fact every lender likely has some variation of rates that you can pay points to buy the rate down. But I think borrowers they don't understand that a lot of times, regardless of the institution, they're just not comparing apples to apples when they're trying to do their analysis. They really need professionals like yourself to understand the process, right?
Right.
How do you
get that?
I'm sorry. Go ahead.
No, I just said appreciate that, but yeah, thank you.
Well, how do you get your team members to? I know you manage a decent sized team. How do you get your team members to help borrowers do this, and how do you get like new team members who are coming in to be able to first understand and reach out to people and be able to help educate them on this?
Shadowing is the best way. I mean, we can put together a 100-page manual on how to, but everybody's different. Their styles are different. Every client's different. So as we have new team members that are going into the origination side, we'll start them out first in more of a assistant or transaction coordinator role. And then as they're migrating and learning more about the loan origination side, even with this COVID going on, at least 4 or 5 times a week, I have a colleague of mine who's training right now, and I'll call her on my cell phone, and she and I will call 6 or 8 borrowers over the next couple of hours. She has access to my screen. I'll give her access, and she'll be listening to conversation, participating in the conversation as if she's in here in my office, even though she's at her home office right now. But shadowing is the best way. Then after each call, I explain my why with that particular borrower, why we're recommending points because they're going to be in this house for 20 years, or why we're suggesting no points because these people move every 3 to 5 years. So that's, in my opinion, the best way to do it is live shadowing.
Yeah, that's a good point. And I'll tell you, borrowers also often don't understand how long they're going to be in a house. And I think you mentioned 5 years or less is pretty common, or maybe even an average. I don't know that I've ever been, despite, I think every time I move into a place, I think I'm going to be there forever. But yeah, it really is like 5 years, and something happens. You relocate because of a job, or you're downsizing because I have kids who are now off in college, and I don't need as big a place anymore. Lots of different reasons that people might, or even just rates get better. Although they're pretty darn good right now. I don't know. we've been seeing they're going to go sooner.
If people refi now need to refi again, we're in a world of hurt.
Yeah, it seems like it, right? Seems like it. Well, one other aspect that has impacted this, I think, is, there was this recent move by FHFA and Fannie and Freddie on this refi adverse market fee. Tell us a little bit about what you've been seeing there.
Yeah, it was, I guess, late last week, I got an email about 11:15 from my good friend and colleague, Dawn Robinson, who announced that this just came out effectively tomorrow. Fortunately, I was able to get in and lock what few refis had not already been locked. I'm not kidding you, right before midnight that night, before things shut down. But FHFA announced a 50 basis point increase to the loan level pricing, which equates to the end consumer of anywhere from an eighth to a quarter in rate. And they announced it is for any delivery of mortgages from September 1st on. And even if the loan was closing that day, it takes most lenders, anywhere from a few days to a couple of weeks to get the package together to be able to deliver it. And so all of those loans that have been in processing with all lenders, where we locked them in, July or August, some lenders even in late June, because a lot of them are running at 60 days or longer. But all those loans that have not been closed and delivered are all going to get hit that 50 basis points as of September 1st. So lenders are scrambling to get those other ones that have already closed delivered, but the ones that had not been, it's a haircut of, depending on the size of the origination company, from a few million to multi-million dollar haircut immediately that night.
Right.
There was control. So the borrowers' rates all went up an eighth to a quarter. The very next day, I'm hearing some lenders are contemplating charging for lock extensions to try to recoup it. I personally think that's a bad move because if a lender's having to extend on a refi, it's most likely because our industry is backlogged right now, which is not the consumer's fault. But I am hearing some rumors of that. Hopefully they'll back down on that. But all in all, the rates went up about an eighth. It's unfortunate that FHFA did that. My personal opinion, and I'm not speaking on behalf of TMBA or Prime Lending by saying this, but Fannie and Freddie are already well capitalized, and y'all can look up, see what kind of profits they've posted over the last couple of quarters.
Right.
But they're trying to further capitalize, in my opinion, to set it up for a possible privatization in the near future. And what an easy way to do it on these refis, because it's probably easy money for them to pack that in there. Unfortunately, it's the consumer that's paying for it today, but it is unfortunate.
Yeah, for sure. In fact, I mentioned this on the last live stream, but it's a pretty rare event where I see groups as disparate and different as, for example, the Center for Responsible Lending, a consumer advocacy group,
Right.
Paired up with the American Bankers Association or National MBA or National Association of Realtors, all on the same side, criticizing this change or this fee that FHFA and the Fannie and Freddie groups have imposed. And in fact, there was the Trump administration yesterday was pretty highly critical of this fee as well. I know there's been a massive outcry and people trying to get the GSEs to pull those fees down. I haven't heard anything that they're planning to do that yet or not, but there has been some sort of strange alliances in that regard, because it really does impact a huge number of people in a lot of different ways. And I think part of the criticism is, why would you do it now when there is so much uncertainty in the near future, with COVID-19 issues going on, and nobody really knows. Small businesses, employment, everything is kind of up in the air.
So imagine, you just brought up a good point. Imagine if 3 weeks from now they decide to pull that back. Are all lenders going to turn around and give a 50 basis point lender credit back to their consumers that are in process right now? And it's going to be very interesting to see what happens if they decide to reverse that.
Yeah. It's these are, lots of people are saying these are crazy times. They're certainly different.
Right.
And so. Well, any other thoughts? I know you're super busy in part because of the refi surge that's going on, and in part just because of your regular business, and I don't want to keep you. Any other thoughts, topics you want to touch on as we're here?
No, just keep reiterating. Half of our job right now is managing emotions of our colleagues in-house, the underwriters, the closers, the processors, the other loan officers, the processors. Everybody is working 8 days a week right now, and they're exhausted. Getting creative to reward over and above the additional money that lenders are throwing out. We've got to do other things to get creative, because unfortunately, if we're working people cradle to grave, they don't have time to go spend the money. So we have to think of other ways to keep people motivated in addition to the dollars. It's also setting right expectations, not just internally of turnaround times and such, but with borrowers. So if a borrower calls in, and if a company's underwriting time is, I'm hearing some of them are over 30 days even, for refis. And if a company's underwriting turn time is at 30 days, the loan officer needs to tell the borrower up front, this is going to take 2 months to get processed and get closed. And you only, my good friend Bill Hart mentioned in a recent podcast that you only have one opportunity to set expectations. You can't keep resetting expectations. So we have to do a really good job, both internally and externally, to set reasonable and attainable expectations up front, even if we have to underpromise. There's a risk of losing that one client, but I'd rather lose that client than have a ticked off client. So
the reputation gets out there, right? And so one bad client can mean a tarnish or taint on the reputation for forever, because they talk to lots of people. And the emotional part of it is just like you say, it's very important. If I were refining or getting a loan, you tell me up front it's going to be 60 days, then I may not like it, but at least I know. Whereas if I hear 30 or 20 or whatever, and then it turns out that it's 40 and then it's 50 and then it's 60, I'm just going to be more and more frustrated, and it doesn't go well for anyone.
I'd rather tell you 60, get it done in 45, and you're a raving fan, than tell you 45 and have to apologize for those next couple of weeks.
Yeah, completely agree. We do the same thing at my firm, and that's one of the reasons we get along.
Exactly.
Well, listen, I know you want to plug Texas MBA as well. So, you're a past president. What do you think about Texas MBA?
Love it, and we'll love it till for the rest of my life. They are a great organization. Ever since this COVID thing hit, we've certainly had huge curveballs. Our annual convention that we typically have close to 1,000 people at, we had to go virtual for our meeting and cancel the convention, unfortunately. We have another one coming up in the fall that's going to be very similarly virtually presented. But hang with us. There's a lot of good content. So please get registered for the fall event at texasmba.org. You don't even have to dress up for it. Just wear a nice shirt and above, and you can log in and get a lot of good content from folks like Troy. And it's very, very economical, obviously, as well. Save you on a hotel room.
Right. Well, listen, Mark, thank you so much for coming on. We do appreciate it, and you're always welcome back.
Anytime, my friend.
Yeah, thank you so much. Anybody who appreciates this live stream, feel free to subscribe, share the link with your friends. If you have some topics you want answered or addressed, get that information to us, and we'll try our best to get that on. This is the Mortgage Banking live stream.